Hey guys, happy Tuesday. Hope you're having a wonderful holiday season with the family. Hope all you guys are doing great. Just want to kind of bring you up to speed on current market environment, right? Um, and specifically the oil market. So, um, I've been pretty bearish on oil prices shortly after the beginning of the Ukraine and Russian war. Not so much because of the war itself, right? Because war is inflationary, but because of the fact that I would say that was basically the start of the US economic recession. And not only the US economic recession, but again, the global economic recession, right? As we can kind of point to a lot of other countries that have kind of began or led the recession, such as China, right? China has been dealing with the zero COVID policy for the longest time. And in a way, it's been a good thing for inflation and oil prices, right? Had it not been for China being in a zero COVID policy lockdown, we would have seen some pretty crazier oil prices, right? Because China is one of the world's largest importer of oil. So the fact that they have had a huge economic slowdown and their capital markets have basically crashed over like the last basically 2 years, it has been a plus for inflation. I'm gonna go and share some of information I've been coming across. Reason why I've been bearish on oil, or I've felt that it was gonna like prices were gonna come down, was because of the fact that the economy was slowing down, right? And I think it's potentially going to get worse next year because we have just recently started seeing layoffs, specifically in the tech industry. There's been a lot of layoffs, and I'm curious to see where do these layoffs lead in 2023. As if you guys been following the news and so forth, Amazon has laid off a bunch of employees continuously over and over, Facebook, Google, and so forth. And that is just the tech sector so far. It hasn't really kind of trickled over to other industries yet. So, um, one of the things that I've been worried about in terms of like oil prices and inflation is the fact that the United States government decided to um, get into negotiations with the G7 and to place a cap on oil prices. And the current cap agreed to is $60 a barrel, right? Which in reality is not bad, right? Considering oil prices are basically near those levels at the moment. And oil producing companies in Russia, basically, it costs them approximately $40 a barrel just to produce that barrel. And $60 gives them some room for profit, right? However, it's a tricky situation because it's a geopolitical issue. And Russian President Vladimir Putin is kind of against the cap, saying that he's potentially consider some retaliation against what he calls the stupid West cap. Basically, what the United States and the G7 is trying to do is they're going to place a cap on Russian oil for $60 a barrel, and they're going to request that every country out there that is going to purchase oil from Russia follow that $60 a barrel cap. Otherwise, they would not insure or the insurance. They're not put the insurance on the cargo ships they're transporting the Russian crude oil, which between the G7 and the United States, they basically have a monopoly in terms of the insurance that is placed on these huge cargo ships. So basically like what I was saying, Putin is potentially warning that he might consider cutting oil production over what he calls the stupid price cap. Why is this important? Because Russia is basically the second world's biggest exporter of energy. And if they begin to cut production, it's not something that at some point in the near future they can quickly, begin production again. So it's basically an industry. The energy crude oil market industry has been underinvested for years because of the push for renewable energy and so forth. So if Russia goes ahead and kind of starts tapping back on what they're producing in terms of crude oil, right? It might cause some problems later down the line in the future when there is going to be some sort of supply and demand imbalance, which might lead to potentially crazy volatile oil prices coming back, right? So Putin is basically saying he is not going to sell to any country that tries to apply the Russian oil cap on Russian crude oil. So I'm curious to see what he plans to do in terms of retaliation. So like I was saying, that is scary because if he does potentially start cutting back on production, it's going to create a massive supply demand imbalance, meaning that, let's say, for example, if the Federal Reserve does create a soft landing in the economy like they're saying they're going to, then that means that potentially inflation can be a problem again. Or let's say that the Federal Reserve pivots at some point in the near future, meaning that they, instead of raising rates, they begin to drop rates. That is going to be an inflationary scenario and potentially put upward pressure on oil prices. And if you combine that with the fact that now Russia has reduced their production of oil, which is not something you can automatically, switch a switch and then start production immediately again to kind of balance out the supply in the market, right? So Putin in this interview basically is saying, hey, the industry is already underinvested, underfunded. And if we listen only to consumers, then this investment will be reduced to zero. All this will lead at some stage to a catastrophic surge in prices and collapse of the global energy sector. So what has recently been putting downward pressure on oil prices has been the fact that we are potentially facing a global slowdown, right? So layoffs continue to increase, and specifically next year, if that continues to be the trend where companies continue laying off people, what could occur is, of course, less demand for oil. So less people commuting to work and so forth, and using less energy, right? So on another note, the CEO of Chase, so Jamie Dimon, basically is saying that he predicts there's going to be some sort of oil crisis in the near future, which is he's kind of speculating that when the Chinese government begins to relax on the zero COVID policy and they begin to fully reopen, they are obviously going to be consuming more energy, right? And that is going to be a factor to potentially bring oil prices up. This is kind of what I was going into, the fact that oil continues to prices continue to drop, right? And it's basically because of the big part of it is basically the Chinese zero COVID policy. That has been a blessing in disguise for the global energy market in terms of keeping prices down, right? Because as I was saying, China is one of the largest consumers of importers of oil in the world. And on another note, there was recently some Keystone line pipe that kind of erupted in I forget where it was again. So the shipping of heavy crude oil, Canadian crude oil to U.S. refineries have been reduced by 622,000 barrels a day. And then it just goes into, again, Putin saying, oh, I'm not going to sell oil to any country that imposes the stupid price cap on Russian exports. So it's crazy situation. And this is kind of what I was talking about. If Federal Reserve decides to pivot, that would potentially be a catalyst to put upward pressure on anything that is inflationary, right? And specifically the crazy oil market, right? Because the conflict in Ukraine is still ongoing. Putin is basically warning or saying that he's going to retaliate and potentially cut production and not sell to any countries that places the oil cap on them. I don't feel like the government should have intervened with the oil market, because based off of the fact that it seems as if we're heading into a recession, if we're not already, that's kind of in itself bring down oil prices. So now if the government intervenes, they might potentially make things worse. They might do the opposite of what they're trying to do, and they're gonna make Putin retaliate in some sort of way that is going to dramatically affect oil prices in the future, potentially pushing them back up to some crazy amount. So basically, yeah, if the Federal Reserve pivots and they start dropping down rates, it's going to be a scary situation for the oil market in terms of potentially we might see higher fuel prices, right? And then if you combine that with the reopening of China, which again, I was saying they're one of the largest importers of crude oil, it's going to be massive upward pressure for the oil market. So potentially prices are going to get a little crazy again. So basically, yeah, this article goes into, which is by some Bank of America analysts. So if a dovish Fed will send oil back up to $100, dovish Fed meaning a Federal Reserve, if they begin to drop interest rates again, it's going to create some sort of inflationary scenario. But I don't think they can pivot anytime soon because of that. Energy and inflation, inflationary commodities are going to potentially explode if the Fed pivots and starts to drop interest rates down again. So basically, this article just goes into the fact that if the Fed pivots, oil is going to average again somewhere back to $100 a barrel or above. So yeah, that's basically the craziness going on in the oil markets recently, which you can kind of see here where our oil prices recently. So these are the kind of the future markets that I like to watch, because you have CL, which is light crude oil futures. Basically, this is the price of oil per barrel, which is currently $75.95. But you can kind of see it's been in a downward trend, right? Downward trend. And then RBOB gasoline futures, which is basically the gasoline in the pumps, right? That this is kind of where you can range where the gasoline in the pump is going to be. You just look at the RB gasoline futures. So yeah, on another note, basically, inflation, the inflationary index, CPI came out today at 7.1%, which is down from the month of October, which came in at 7.3%. So inflation has kind of come down somewhat in the past couple of months. But then again, I don't believe the Federal Reserve is going to pivot anytime soon and begin to start dropping the Fed fund rate, right? And we've kind of seen mortgage rates kind of come down a bit, and other similar rates kind of drop down a bit. So basically, mortgage rates are not in a way influenced by the Federal Reserve. They are influenced, of course, but they're not fully controlled by the Federal Reserve. They're more controlled by speculators and traders in the market, where they kind of speculate on where these interest rates are going, because these interest rates can be traded in the market, right? So yeah, that's basically some in market news in terms of specifically the oil market. I kind of wanted to give you an update on. So in the near future, I feel like oil prices are going to continue to downtrend. However, the scary and tricky situation is, what is Putin going to do in retaliation to the Russian oil cap that has been placed for $60 a barrel? If he retaliates and starts reducing production, that can create some catastrophic black swan situation. So I've been bearish for the most part on crude oil. However, with now the Russian oil cap, it's become very dangerous, right? Because it can completely explode and go the other way, creating some sort of black swan event. And on another note, so the Federal Reserve FOMC meeting is tomorrow. I'm pretty sure they're going to raise the Fed rate again by another 50 basis points. So it's going to be interesting to see what happens tomorrow with the market, whether it continues to rally or whether it completely dumps tomorrow. So that's on another note. And yeah, basically, thank you for joining me and watching to the end. And I hope you guys have some awesome holidays, and have a great time with the family. So I'll talk to you guys later.